Welcome everyone. Welcome to today's market wrap, and I have with me, of course, Mr. Pankaj Pandey. Sir, finally, बहुत अरसे के बाद we have seen some relief in the markets. There was one particular day where we saw a good final big green candle in the Nifty as well, and then even today, as we speak on Friday, I think the markets did not fall back at least. So, how does it? Is it really the reason? Is it here to be happy, or will there be volatility still going ahead?
So hi, good evening, Vishu. Yes, Nifty ended 3 weeks losing streak and settled about 2% higher at 22,600 kind of a level. I think last time also we had a bounce of about 1,000 odd points. So with that in perspective, it is possible that this oversold market could sort of stretch to levels like say 23,000. And this is again largely because some of the heavyweights like Reliance, which has been sort of significantly beaten down, performed in this particular week. Another interesting thing was that the intensity of FII selling was on a lower side, and metal did well. But when you sort of come to the outlook, I think the challenges still remain. One, you have a truncated week next week. So volatility is definitely going to persist because you really do not have clarity on the entire tariff-related developments. In fact, our sense is that when the two of the biggest global economies in terms of GDP, which is US and China, are engaged in a tariff war and are literally not much in talking terms, then it will have implications for global growth as well as global inflation, and which is not a very good sign for the markets or markets in general, including our markets also. And overall sense is that see, while we are sort of cheering some of the relief given to countries like say Mexico and Canada, I think Europe is also an unknown element as of now. So from that perspective, a lot of these global uncertainties persist, and now the challenge is that if this volatility related to tariff continues, then it is going to hamper the growth not only for us and even for global players as well. So for us, for example, we have been waiting for safeguard duty on metals for quite some time. But now even the ministry says that they're in a wait and watch mode. So it's a more of a global policy paralysis which can sort of creep in if we really do not get enough clarity. While domestically things have been good, earning growth is expected to be about 14% CAGR next 2 years. Crude is down, very good for us. There is a good potential that there will be a tariff arbitrage. But in this process of volatility, are we going to remain at current levels? I think that is where the challenge lies. And my sense is that I would not really rule out that the worst is behind us. So, which is why, in case if someone wants to sit on a bit of a cash, I think that's really not a bad idea.
Right. Absolutely, sir. So you mentioned FII selling did ease off a little bit. How did it look like sector-wise?
So yes, I think we have seen two major bouts of selling. One was in the month of October when globally China was the preferred market, and when Trump came in, then most of the outflows have been to US. So January and October we have seen significant outflows. Now coming to Feb, I think good part is that in the month of Feb, or especially in the second half, we have seen the FI selling has been about 12,000 odd crores, whereas the DIs have bought about 18,000 odd crores. And some of the heavyweights like say BFSI, which have been taking a good amount of brunt of the FI selling. I think good part is that while they have still been net sellers, the pace of net selling has slowed down. So, for example, in a BFSI as a sector, they sold roughly about 25,000 odd crores in the month of Jan, whereas in Feb, this number came down to about 7,000 odd crores. So, a significant improvement. But there are still some sectors where the selling is still going on. So, for example, automobiles has seen one of the highest outflows of about 3,280 odd crores in the second half of the month. First half, it was only about 700 odd crores. So, it is witnessing a higher selling. Healthcare also witnessed a sort of a selling because in the first half, FIs were buying healthcare stocks. In the second half, they sold nearly close to 3,000 odd crores. FMCG, they have sold about 7,000 odd crores. Telecom, I wouldn't give much weightage because of the Bharti block deal, but they have seen a good amount of inflows. I think good part we can take is that the intensity of FII selling has sort of come down. Whether this is a sort of a reversal, we need to sort of see, because see, post October also there were months in terms of November, December, which are quite calmer. So we still need to see, wait and watch. But I think BFSI not witnessing too much of a selling is definitely positive, because Nifty cannot run without BFSI participating, and for that, FI needs to sort of come back.
Absolutely. I think there was at least some positive news for BFSI with RBI announcing liquidity injection. How do we look at this news?
Oh yes, I think RBI under new leadership is quite committed in terms of growth and also the transmission of rate cards. And I think they have injected the liquidity. So they've done two OMOs to the tune of about 1 lakh crore. Even the short-term liquidity, they have come through VRR auction of about 50,000 odd crores. They are doing a 10,000 or $10 billion kind of a US INR swap also. And what they have done is that in the month of Jan, the liquidity deficit was about 3 lakh crore, which came down to about 1.5 lakh crore in the month of Feb. And further, it has come down to about 30,000 odd crores. So I think they're doing a quite a fabulous job in terms of liquidity, and which is why the bond yields are quite stable at this point in time, unlike a lot of places where the bond yields have sort of gone up. Good part is that our sense is that in the April month, we are going to see a rate cut largely expected. And once this rate cut happens, our sense is that with this kind of a liquidity measure, the transmission is going to also happen. So I think this new governor is quite sort of focused in terms of driving the growth and not only managing the inflation.
Absolutely, sir. I think the auto volumes for Feb 25 are also out. What does the picture look like?
So we show quite a mixed picture. So I think the only segment which is done well is tractor. So tractor, we have seen 18% growth by M&M. I think they continue to do well. Escorts of late had been struggling, but this month has been pretty good, 11% kind of a growth. So tractor is one segment which is expected to witness a growth of about 15% in Q4 and full year about high single digits. I think on the two-wheeler, it's been a sort of a mixed bag within players. ICICI continues to do well. So they've delivered a growth rate of about 19 odd percent. TVS continues to do well, high single-digit kind of a growth rate. I think Bajaj is struggling, especially on the domestic front. So their sales are down about 14 odd percent, while on the export side, they have done well. So clearly the premiumization piece in the two-wheeler is working out. And I think same thing is being witnessed in the four-wheeler as a segment. So again, M&M continues to do very well with a 19% kind of a growth rate. In fact, they have overtaken Hyundai as well. Maruti was more of a flattish, but the product mix was better. So they sold of the overall mix, 33% was SUV. So that way relatively better. I think the overall segments of say CV continues to sort of languish, so no major excitement there. So I think overall sense is that for auto, two things are exciting going forward. One is when we'll have the eighth pay commission recommendations getting implemented. I think the commission is already formed, so it is still some time away. The other is the tax benefit in the budget, which will start kicking in from April onwards. And so from that perspective, auto looks exciting. Probably 1 month or so, probably we may not see much of a number. But we need to see these factors, how they sort of play out. What we're liking is Mahindra and Mahindra, so which continues to do very well on both the fronts, tractor as well as the PV side.
Absolutely. So let's talk about real estate for a bit. How does this sector look right now?
Oh, yes. So I think with the correction in market, the real estate stocks have also sort of corrected about 25, 30 odd percent. And one concern was that is the wealth effect waning off because of the market decline? But when you sort of look at the property registrations for the month of Feb for a key market like Mumbai, property registrations continue to be about 12,000. So they continue to sort of maintain that higher run rate. While you look at from a YTD perspective for FY25 till Feb, volume is up about closer to 9% odd. The value is up about 19% odd, which clearly implies that the high ticket size properties are clearly doing well. So obviously, it is definitely positive for players like, say, Oberoi, Macrotech, or Godrej. And this trend is not there in Mumbai alone. In fact, we have seen in NCR also. So a player like BTP, I mean, they sold properties worth about 1,500 odd crores on day one of their launch. And so again, the interest is quite good there. And this is despite the fact that NCR region has witnessed the steepest price hike. The other thing is, even on the commercial side, things are getting exciting. Just to sort of highlight, we all know that Tesla has signed up for a 4,000 kind of a square feet space in BKC at a rental of 880 per square feet, which is the highest ever we have seen. It's a new benchmark. Previously, Apple had taken about 6,500 kind of a square feet at 738. And obviously, it is definitely positive for a smaller micro region like, say, BKC, where I think some of the players like, say, Suntech Realty, they own commercial assets where the yield as of now is 300 per square feet. So obviously, it is going to lift up or in general, lift up the rental in that particular area. In addition to that, what we are also seeing is that a lot of primary IPOs plus listing of REITs coming into picture. So all I want to highlight is that with 20-30% kind of a correction, the stocks have sort of corrected meaningfully. Now they are no longer trading at a premium to NAVs. And in case if there is further correction, then I think our sense is that stocks like DLF, Oberoi, Phoenix, I think our max states look attractive to us because our sense is that the overall registrations are still sort of intact, and if there is a decline in prices, then the valuations become attractive, which were rich. So that is how I think we are seeing real estate as of now.
Right, sir. Sir, we saw that crude oil has also corrected quite a bit. Other than, of course, trading in commodities directly, how can we play out this development in our markets?
So it has played out in bits and pieces. So yes, crude oil is down about 24% from the YTD levels. Definitely, it is positive for consumer good companies because for them, typically the packaging cost is or the overall raw material cost is about 10 to 15% of the overall cost, including packaging. So any kind of a decline does help. So it is positive for these companies. We have already seen decline in edible oil prices. So palm oil prices have also sort of corrected by 11%. Now, obviously, it is positive for soap companies like HUL or Godrej Consumers. Our sense is that this will help them to sort of recover margins or probably grow their volumes in the quarters ahead. Probably it is going to take a quarter or 2 quarters because these companies, a lot of these companies sit on inventories as well. And I think the other aspect is that when the crude declines, it obviously benefits a segment like, say, paints. Now, in paint, we all know that with the Grasim Gentry, there has been a price or competition sort of going on, which has impacted the margins. And if the crude oil price is correct, it does help the existing players in terms of relieving a bit of a pressure on the margins. But then again, I think this is going to witness probably a quarter after we will see. So all in all, our sense is that if the price is correct from here on, you'll see a margin recovery, and subsequently in the second half, you'll also see a volume recovery for some of these players. What we're liking is, again, a company like, say, ITC or Tata Consumer, and from a overall other perspective, I think Marico is also a decent choice at current levels.
Right, sir. Sir, in the beginning of this episode, I think you mentioned about tariff wars that are about to come about. So, given this current scenario, which sector in India do you see feeling the heat a little bit?
So, Vishu, we have already, I think, spoken about pharma products. So, auto OEMs may not get impacted while we have already spoken about Tesla's entry and it really not having much impact on a company like M&M. I think auto ancillary is another a small or a big sub-segment, which again is sort of witnessing those anxiety moments because of the tariff war. I mean, to give you in perspective, the overall trade between US and India is somewhere around $7.2 billion, which is about 1,000 odd crores. And what we export is about 5.7, and what we import is about 1.5. Obviously, on the exported leg, there are negligible tariff. On the imported front, which we get it from US, and there is an overall tariff of about 10 odd percent. So largely senses that probably the industry might pitch the government to sort of lower these so that the tariffs are not there. Because seven overall $5.7 billion kind of export is still a sort of a significant number. What we are already seeing is the casualty, especially when you look at the Class 8 truck orders. Now, these orders have already come down from, so from a last year Feb perspective, it is already down 30 plus percent, both month on month or YY basis. So obviously new orders are definitely not coming in. And see, the challenge is that a lot of these trucks are made in Mexico and exported to US. Some trucks are made in US and exported to Canada. So it's a kind of a overall quite jumbled up from a overall layman understanding perspective, and which is why probably it is bit negative or bit challenging for companies like say Bharat Forge or forging companies like say Ramakrishna Forgings. What we are liking is more of domestic oriented players because till the time we will get clarity on April 2 or you never know, Trump being Trump, these deadlines also get pushed. So I think it is better to focus on on players which are domestic focus. So something like say Lumax Auto Technologies. This company last quarter has grown at a 24% top line, something similar in the bottom line front, trading at about 20 times on a forward basis. M&M and Bajaj Auto are its top two customers. So 40% of top line comes from these two customers. And incidentally, both these companies, or especially M&M, is doing quite well.
Right, sir. Sir, I think Nifty Metals also saw some good green candles this week. Why did this happen?
Oh, yes. I think the bigger factor is China because China came up with a GDP number of 5% kind of a growth. In addition to that, what they said is that so they have a capacity of about 1,000 million tons, and they want to sort of cut it down to about cut it by 50 million tons. So about 5% kind of a reduction in this thing. And so China itself growing at 5% is positive, and on top of it, it is talking about a 5% cut in the overall capacity, steel capacity, is definitely a positive news for steel traders, and which is why metal index was up about 9 odd percent compared to that. Nifty was only up 2 odd percent. But having said that, historically we have seen that China committing capacity cuts a number of times, but we haven't seen any meaningful correction in capacities. But yes, in the interim, some positives have happened. The steel prices have done better. So it's up about 2,000 rupees per ton. Even on the non-ferrous front, we've seen copper prices are at a higher level. Aluminum prices are trading in a higher range. So obviously, it is positive for metal as an overall pack. But like I said, till the time we don't have enough clarity in terms of what kind of tariff China, US levies on China and the kind of potential dumping we'll continue to witness. Because see, the imports are at an 8-year high in India. So from that, and till that time, this clarity is not there. The government itself is in a wait and watch mode. And which is why, while this sector has done well, but I think you still need clarity on the tariff for the stocks to sort of do well. Well, they have done well on the sentimental basis, but you need actual hard safeguard duties to protect the industry. But nonetheless, we like something like JSW Steel and JSPL. I think both these companies are aggressively expanding capacities, both upstream and downstream. So I think these are the preferred picks in this segment.
Right, right, sir. And there was also one more news regarding Coforge, and they apparently won a big deal. What are the details there, sir?
Oh yes, fairly large deal because the kind of deal what they won is the kind of turnover they do on an annual basis. So company secured a 13-year contract worth of about $1.56 billion, and this is fairly large for a company of their size. And so the annual revenues are going to be about $120 million. And if you sort of convert that, it is significant, 7.5% of their current annualized revenues. And this is coming from the travel sector, so which already contributes about 25 or 20% of their overall revenues. And since the company has been guiding for about double $2 billion kind of a growth, so from that perspective, this deal win provides a good amount of comfort. See, the challenge with Coforge was that the valuations were rich, and the growth was something which was relatively lower. Now, with this deal, I think that has been sort of addressed. And we've seen stock correcting by about 25%. So, which is where we've changed our stance from a hold rating to a buy rating on the stock with a target price of 9,200.
Absolutely. Well, this was our time for this week. Thank you so much, everyone, for watching. And thank you so much, Pankaj sir, for sharing your insights with us. We'll be back next week. If you have any questions, please feel free to put them down in the comments. Once again, thank you for watching.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.